Thursday, August 7th, market analysis. Stan Ehrlich, good morning. Good afternoon. 1:43 California time. As you know by now, I do these in just as quickly as I can after the close. There's some other things I have to do, keeping records and so on, immediately after the close. So, stock markets did rally this morning, and they rallied pretty darn good. They got back up higher again than the high of the previous day, and that's a new high for the last 4 days, except for the most important one by far and away, obviously the high, and we'll rescale, of the historic highs, Thursday, July 31st. I proclaimed, that the market could have topped out. So far, my patience has been tested. The market dropped great on that Friday, huge, but recovered almost all of Friday's decline on Monday. It did reverse a little, slipping lower on Tuesday, but yesterday we actually had a bullish engulfing. Now, I said yesterday I don't believe this is going to be a profitable signal, and I don't. So far, it did rally a little, but it closed around unchanged to a little lower. Getting below yesterday's lows would cancel out yesterday's buy signal completely. I do still think that's going to happen very soon. Could be tomorrow, could be the next few days. Tomorrow's Friday, remember. So, I don't trust this rally. It closed flat to a little lower today. That's in my favor. Let's see it start to drop some. It's not yet. 1 minute chart. Came down, made new lows for the session, quite a bit new lows, and then came back to close around unchanged. I was a little disappointed as to how much of a rally it had. Would have liked to see it close a lot lower near the lows. The spider obviously did about the same thing. Remember, the hours of trading are substantially different, so the charts oftentimes are somewhat different. New high, last 4 or 5 days. The gap is closed, so that's not an issue anymore. I'll actually put a little marker in here to remind me that there was a gap, and it was just closed in one single day, and that's that. So, no violation of the rule. Poor close. Looking for more of a break. 1 minute data. I'm sorry, this is the 5-minute charts. Nothing here, nothing to scream bloody murder about. 2 sell signals in the QQQ, Tuesday and Thursday of last week. Thursday still being the record high. Now, we did close a little on the firm side today in the Qs and the NASDAQ, but the basic rule is you don't go above the high of the bearish engulfing, ER sell signal, which we didn't. But we've got very little bumper room left. I'm getting a little anxious here. I really would like to see this drop lower than the close of Tuesday, which would be a new low close of the week, if it happened tomorrow. Okay, and the QQQ popped back up on the close, as you can see. NASDAQ futures, unfortunately, a bullish engulfing yesterday. I say unfortunately because, of course, I don't believe it. I am still, I remind you, expecting, thinking, anticipating that the bearish engulfing on Thursday of last week for all of the indexes, basically, is the beginning of a decline into October. So I am looking for this month to be a down month and September to probably also be a down month into the October lows, quote unquote. And I'll do some research on that and put some spreadsheets up and graphics in the YouTubes to come well before this month is over. I can promise you that. Next chart is simply the 5-minute on the NASDAQ. Pop back pretty decently, but the higher high than a close that was coming back from being lower lows. Not particularly good, not all that bad either. Dow, big outside down day, not a bearish engulfing red signal because we weren't overbought and haven't been overbought since the first top we had, which was a bearish engulfing ER sell signal, which did end up producing a drop off of about a week and a half. It wasn't all that great. And by the way, don't assume that you bought back on the low of the break. That's ridiculous. You probably made a half to two-thirds of the decline and got out somewhere along the line there if you were doing the right thing in the first place. Too bad we didn't get a second bearish engulfing on the second high of a double high, double top. And now the outside down day certainly implies that we're going to start slipping. Test support 43,484 and probably not hold below 42,885. And you know how far this can fall in 2 months? Obviously, maybe all the way down to April's lows and even further. I'm not sure about that yet. I don't want to talk about that yet. I just think it's not out of the question. Next. Dow, big break, so-so comeback. We've got the Russell. Stopped at resistance, about where it stopped yesterday. Also, like the Dow, an outside down day, bearish engulfing, but not overbought. Not for the last month or so. Very similar to the YM. Too bad the sell signal wasn't on a top or a high. Still a basic same kind of commentary, expecting this market to test support, fail, and maybe in 2 months or so, come back down to the lows of April, and I can't rule out even lower. Next. Russell, 5-minute chart, just simply a bounce back to a little resistance. Okay, bonds. Oh my God, they're still holding. We are still closing above the neckline. Yesterday was very bothersome. It appears the market dropped. I didn't see it happen at the time. I just looking at the daily chart at the end of the day. Well below the neckline. That's a no-no. But the closing price was above the neckline and above support, which was pretty good. Rebound. No major, a minor rule, but the major rule is you never close on the other side of the neckline once you've crossed it. Going up or down, down or up, whichever. And we're still holding above today's lows on the neckline. I'm waiting for a new high. Above 1607. That was the exact high. And then we should be on our way up some more. Besides that, if it closes above 1607, it's going to be a new high close since late May. That's got to turn some longer-term traders' heads. Next. 10-year notes, dipped a little, nothing going on. Support, looking for more strength. Frankly, a lot more strength. Let's look at bonds one more time. The major upside objective in this big head and shoulder bottom formation, talking about April, May, June, July, is a little over 122. The upside objective on the small pattern I've talked about for weeks is not far away. 116.18, and frankly, it's probably going to be reached in one good strong up day, 116.18 or higher. Could happen easily in one full day. Next, crude. Bearish engulfing yesterday. No significant strength. Closed lower than where it closed yesterday. Almost made a new low. I think it's about to make lows lower than yesterday's lows, which will be a new low for the move down for almost 2 months. Test support. I don't think support's going to hold. At the bottom of support, probably not. And I'm actually looking for something significantly lower, maybe as low as the 53 or lower price range. Next. A little bit more strength than natural gas. This is still okay. I still think this little resistance area, if it can get there in the first place, is going to stop the rally. And that's just a little bit higher. If that stops the rally, it'll turn down to new lows for the trend and keep going down. Remember, my objective is 1.1. I'll refine that slightly. 1.1 and a half. Big deal. So, nothing wrong with this pattern. It's acting great. This is a complex head and shoulder top. I was outlining now for about, got to be 2 months, maybe more. Next, and we got a bearish engulfing smack dab on the last shoulder high. Perfecto. Next, bearish engulfing on the top of the market so far. Heating oil's been making new lows today. It's a doji. Closed slightly higher. Nothing going on today. Looking for lower levels. I don't think the support is going to hold. I think we're coming down probably to the next significant support area, starting at 2.1 and under. Next, gold, silver, platinum, copper. Nice rally. Not that close to overbought, but very close to where it's topped out 3 times already. So let's see if it'll top out again in this resistance area that it's almost at. So I think I should be looking for overbought and a sell signal in this yellow range. Next, silver. Nice pop up, a little more than I'd like. I was kind of hoping it'd stay around that yellow line a little bit closer. Not overbought yet. There's a chance this could come up real close to previous highs. We've got higher lows over time since April. Not that long a time, but, you know, it's a few months. Higher highs, higher lows, looking fairly strong. We did have a buy signal almost at the bottom, but it was the start of the move. Never got lower than the low of that day. Platinum couldn't get higher than a few days ago, closed barely higher on the day. Maybe it's running out of steam quicker than gold and silver. I think this can turn around and start to slip anytime. Got to look for these support areas to be tested. And coming down a substantial more than just a little bit could very well come true. Next, copper. Well, again, today's nothing. Just a hair higher than yesterday's small range. Yesterday's lows held, closed basically unchanged. We've been going sideways since the low of the break or crash on July 31st. The rally has been up to a resistance level and stopped cold turkey. I still look for this to collapse again, I think. Could drop off another substantial amount. 410, 410 and a half, 413 looks, yeah, very reachable. Actually, a little more accurately, 4.15 and a half. Next sharp wave down. Next, a little higher on the close. No engulfing, so no green buy. Unfortunately, didn't get below yesterday's low. Soybeans, okay, fine. Coming up to resistance. Now, way out of oversold conditions at the close. The low was oversold. So, maybe a little bit more. I can't justify any big rally for very long. The grain markets have just got troubles like crazy. What about soybean oil now? Nope, another new low after 2 days ago's bearish engulfing. It's coming down, although slowly, coming down. New low again, new low close, not by much. Bearish engulfing working. I'm looking for support to be tested. It better hold, and if it doesn't hold, the neckline may give way also, in which case the whole head and shoulder bottom is canceled. We've already been up to about, a little more than half, 60% maybe, of the minimum upside objective, which still stands at 62, 62 or higher. I got to have a turnaround, ASAP. Next, meal, a little firmer close, nice. Doji, indecision. Got to see it close above 182 for me to raise one eyebrow and get interested in a shoulder, head, and last shoulder low. A little bit lopsided. Pattern is not that big. It probably produces an upside objective to test the resistance area, and then it's all over and right back down again. Next, corn. A little rally out of oversold. No signals. I don't think the rally's going to go very far. Could even stop at 387 3/4. Maybe a little higher, 396 1/4. And I'm not ruling out a gap closure all the way up to, wow, 417. So I can't get super bullish in this. I've got no bottoms, no buy signals, nothing but a rally out of oversold, which could be pretty good. And there's the reason for it, a gap. But after that, wow, what kind of resistance we've got? Tremendous. Normally, a bottom in the grain markets is more likely than not going to take months to develop. Corn, we just looked at. We're looking at wheat, same as corn. Next, we got the stock, Shell. Support being tested. Yep. Nothing wrong with the data. Good. I mentioned that that could happen today. It did. It held. Closed very poorly. That closed is the lowest close for about a little over 2 weeks. Here we go. Next move down, 70 exactly. Next move down, maybe 6920. And let's see what happens after that. Could happen all at once. New high close for Apple. Now that's interesting. Now it's officially up to a resistance area, period. It's almost overbought. It came very, very close to overbought today. RSI got as high as 74.81. So 75 or higher is officially yellow or overbought. But so close, not quite. So a little more strength, a little higher high tomorrow is still in a major resistance area, and then it should get overbought. Then we could get a bearish engulfing red sell signal again. We did gap up today. Got to put a marker on the gap. So that's a magnet to go back down. That looks about right. Oh, no, it didn't stick. Sorry. Okay, good. Okay. So it's right. It's mixed in with some support at the same time. Interesting. Interested to see how that gets handled. Yeah, that's about it. All right. Gap to get closed, support to be tested, and I don't think it'll hold. I think we're actually going to go back down toward 200, 195. Next. Pennant formation still persists in Tesla. A little higher close, waiting for a breakout, waiting for signals. My favoritism is a little on the south side, a little bearish, maybe down to 240. Next. NVIDIA, bearish engulfing has now officially been canceled, and that happened on Thursday of last week. I don't like that, of course. It did work for a day. That was it. Bull trend line tested, held, popped up to a new high, but I do want to point out that did not close above the previous rally high, Thursday of last week. So that's got a little bit of negativism to it, but it's still a new high close for the trend. I can't say much bearish about it. That's about it. And it didn't close above previous highs. So I've got to see a break of the trend line first, making new lows second, and then getting below, closing below 171 and lower in order to talk about a lot lower. Next. E-mini. We've seen it. You guys have a great day and profitable trading to you.